Stocks on track to break their longest weekly losing streak in 2 decades. So does that mean that the worst is over, at least for now? Let's ask Troy Gayeski. He is FS Investments Chief Market Strategist. Welcome to Overtime. It's good to see you again. It's been a while.
Yeah, it's been too long. Great to be back on.
Yep. Where do you come down on whether some kind of bottom is in, even if it's just for the near term?
Yeah, well, we think there's a good chance for some more strength here. This is sort of a classic bear market rally or bounce off the bottom. As inflation expectations have rolled over recently and yields have been capped and have come lower, one of the most amazing things about the declines we've had is how consistent they've been. And so we are poised for a counter-trend rally here for quite some time. It could be as long as 2 to 3 weeks. After that, unfortunately, as you know, Scott, the Fed's balance sheet reduction is soon behind it. And then things are going to get far, far choppier and sloppier once again, unfortunately.
If stocks, I expect things to be choppy. Obviously, I'm not expecting a straight line up. On down days, would you be a buyer then of dips?
Well, I think you could be in very certain and select cases, things like semiconductor capital equipment or names like Caterpillar, areas like copper mining. But you want to be very careful because you have to understand that we're due for more multiple compression. And if ultimately the Fed does drain the balance sheet as aggressively as they're stating, it's almost a certainty that economic growth will slow further and will flirt with a recession. So there's no reason to be completely panic-driven here, but you have to realize any dip buying should be done very judiciously. And in general, buying dips in bear markets can turn out very poorly.
Yeah, well, because it's been a sell-the-rip kind of atmosphere, and plenty of people are suggesting it's going to remain that way. Talking about the stock picks in some of the sectors that you just mentioned, we just spoke with Scott Black, who likes KLA-10 Core. You would prefer it through AMAT.
Yeah, either AMAT or ASML. They're both dominant franchises. We're all about solid free cash flow, reasonable free cash flow generation potential. And if you think of the backlog for semiconductor capital equipment, it's really enormous demand. So whether we have an inflationary outcome, whether we have, the Fed can actually thread the needle here, or whether the economy rolls over, semiconductor capital equipment demand is not in question. And then on top of that, you have very reasonable multiples right now. Applied Materials basically trades at a value multiple for a stock with tremendous growth potential. Those are much easier to find now than they were, say, 6 to 12 weeks ago. And again, you have to understand that there more than likely will be a bit more multiple compression over the next 6 to 9 months. But that's something that has very compelling free cash flow and earnings growth in an environment where, a lot of the squishier tech stuff, that's consumer facing has been taken to the woodshed. And you can have a lot more confidence in the sustainability of the demand for semiconductor capital equipment than you can for a lot of other areas of tech.
Let me just ask you about one more, because I don't know. I feel like it flies in the face of what you're thinking is going to happen to the economy later in the year, and that's Caterpillar. Why would I want to buy Caterpillar now if you think that the Fed is going to be aggressive? You're going to have the balance sheet roll off. You're going to have a further hit to the economy. Why this one then?
Yeah, well, so Caterpillar right now is pricing in a lot of pain. You're only at 15 times forward earnings. You have tremendous growth in their core franchises. You have the extra kicker from an increased mining capex, increased agricultural capex, and they're also moving to automation of a lot of their tractor platforms, which is the big growth area. So again, if you're thinking of areas that you can buy cyclicals cheaply, in the event that we clearly avoid recession and stay in a more inflationary environment, Caterpillar could be a clear winner. So in any portfolio, you should be looking at multiple economic and market scenarios. Caterpillar in particular will do much better in a thread the needle or a sustained inflationary environment than clearly any stock will do in a recessionary environment.
All right, we'll talk to you soon. Troy, thank you. That's Troy Gayeski joining us there.